Have you ever been in a heated conversation about taxes? While tax brackets are certainly a hot topic, especially around election season, there is a major problem. Many people simply don't know how they work. There is a common misconception that if you get bumped into a higher tax bracket, your entire income will be taxed at the higher rate. This is simply not true. Federal taxes are marginal, which means that only certain portions of your income are taxed at certain rates. Let us explain further with some visuals. Think of tax brackets as baskets containing your income. When one basket gets full, the remaining balance gets placed in a new basket, or tax bracket. The tax rates shown here show percentages of 10, 12, 22, 24, 32, 35, and 37%, with the income levels that they kick in at. Let's take a look at an example of someone, we'll name them Helen, and we'll focus on the lower levels based on 2022's marginal tax rates. After college, Helen starts her career with an entry-level position and is compensated $30,000 a year. She is a single filer, so her standard deduction is $12,950. Therefore, only $17,050 of Helen's income is taxable. The first basket, which caps out at $10,275, is taxed at 10%, and her remaining $6,775 is placed in the second basket and is taxed at 12%. Now, let's say Helen is doing a great job, and after getting a couple promotions several years later, her new taxable income is $82,050, which makes her highest marginal tax rate 22%. Helen's first $10,275 is taxed at 10%. The next $31,500 is taxed at 12%. And the remaining $40,275 is taxed at 22%. The tax total in this case would be about $13,668. If Helen was taxed 22% on the full taxable income, which we now know isn't how it works, her taxes owed would be over $4,300 more. Since portions of our income get taxed at different rates, the actual rate, or effective tax rate, is typically less than the highest marginal rate. There are other factors that can reduce or increase your taxable income, so it's more complicated than simply taking an average. To calculate the effective tax rate, you'd have to consider all the factors that impact your taxable income, and then divide the total taxes you paid by that figure. For the majority of people, the effective tax rate is likely lower than the highest marginal rate they fall into. We hope we provided some clarity on a complicated topic and helped you understand that just because you get a raise doesn't mean you will bring home less money. For more information about finances, you can check out our library of blogs on our website at myiscteam.com or view our YouTube channel. Remember, when it comes to taxes, always consult your tax professional for the most up-to-date information and changes. Working with a tax professional and a financial advisor can help you be better prepared for tax season.